Welcome back, everyone. This is the weekly performance report. That is late because although I published it over on my channel, I completely forgot to make a video. So I was going to do that yesterday on Sunday, but now it's Monday. And it just so happens that the VIX has skyrocketed, the S&P's down 3% or something like that, and blah, blah, blah. So I will say I've this morning deployed 33% of my cash, which is to say roughly 2.5 to 3% of my entire investment. So 33. What was what is it? The denominator bias. Now I got to look this up. Denominator bias. Something like that. Oh yeah, denominator neglect. You should go look that up for some funsies. The point is, 33% is a much bigger sounding number than 2.5%. I'm not trying to mislead you. I'm just a third of the cash I have on the sidelines, I put to work this morning. In the higher conviction names I have a couple limit orders in. If those get filled or not, we'll see. If that's the case, then I'll be even spending more cash today. And it's kind of nice in the sense that I postponed this video as a consequence of what's occurring this morning. Brokers are down, even though mine was down, but I just retried a couple of times and was able to access it. So that's nice. And I guess Robinhood has 24-hour trading, and that got frozen. So it's like 24 hours. Asterisk sometimes. So, when it matters the most is when it's not available, which is an interesting juxtaposition, because I'm sure a lot of people want to panic sell, but then you have people like me that want to panic buy, I guess. But you have to temper that because, is this a blip? Is this just a little flash crash of 3%, which is a weird thing to say, but I just posted over on Twitter the Fear and Greed Index. I've not actually seen it at all this morning. And so I thought that was interesting. So I went ahead and posted that. I think it's at 19 in extreme fear, whatever that's worth. And right now the S&P is roughly 9% off of the highs. So right now this is just normal correction. Kind of what differentiates in my mind a correction versus a crash is rate of change and total extension and magnitude of the move. So if you have a slow trickle down 1% every day for 30 days, I would think of that as a correction. And then if you have down 30% in 2 days or 5 days, then I would think of that as a crash. I'm seeing both terminologies being used today. And in some sense, there is some crashing going on. The yen carry trade, rate differentials, and I'm not going to pretend like I really know what I'm talking about, and all that money got channeled into tech stocks allegedly, and now there's an unwind and blah, blah, blah. And the Japanese stock market I would call that a crash. I would definitely call what's happening in the Japanese stock market a crash, the Nikkei. And nonetheless, this has nothing to do with the weekly performance report, but it's one of those things. Does the market fall another 20% in a hurry, or not another? It'd have to fall 20%. And then, of course, the dot-com bubble. It's always worth remembering that from top to bottom was 77%. So you see, just imagine in the dot-com bubble, the market's down 6%, 7%. And then, bam, VIX spikes, S&P's down 3%, Qs are down 5%, small caps are down 5%. And then you say, I'm buying this volatility spike in stock crash. Okay, well now you're down 10% in the markets from 7 to 10. And well, unbeknownst to you, you have a lot farther to go with another year or two to go. And could this be that? Could be. I don't know. If it is, then well, I've horribly timed some buying, haven't I? And I want to scroll down. I don't like Well, that's beside the point. I'll just scroll down. Uh, so that's what's occurring. And, people talk about, buying when there's blood on the streets. And I've wanted to write an article about that for a long time, but I've yet to. I've started to, the rough draft phase, but I haven't. Like what does that mean? What does blood mean? And what is buying? Like, what percentage? Like, if you think today there's blood on the streets, do you deploy 100% of the cash you have on the sidelines, or do you deploy 50? Like, what's buying? Do you just nibble 5% of the cash position? And what's blood? How is blood? When what is it? Oh, what's the phrase I always say? When a criterion is based upon adjectives, it's bound to be ambiguous. So how are you going to execute on a strategy that's ambiguous? And the answer is you're not. You're going to let your emotions dictate. So be it. And I guess with that said, I bought some stocks this morning. See what happens. And that's that. So let me go ahead and just read you whatever. I don't remember what I wrote here, really, to be honest. I think it's only amplified by what's occurring today. So, noticeable activities over last week. So last week, I bought URNM, Uranium Miners ETF. I'm down on that. I think that opened down 5 or 6% today. So that's how that goes. So, earnings seasons during this summer lull has been anything but kind to the markets overall. Currently, we're experiencing a roughly 6% correction in the SPY and an 11% correction in the Qs. What does all these names, Celsius, Alar, Trade Desk, CrowdStrike, Intel, Alphamine, China ETF, Vale, and a whole slew of other names all have in common? They're all down off their highs, anywhere from 10% to 50%, meaning that this is a broader market correction. It's not just hard assets and old economy type companies. I say that because I know that many of my followers primarily engage in those names. I will say many of the REITs are holding up well, such as Rexford, VNO, PLD, Welltower, senior housing REITs is at all-time highs. V&Q, which is a REIT ETF, just hit year-to-date highs, albeit not all-time highs. That was written on Friday, so I don't know where it's at today. Valaris and the uranium ETF have fallen off a cliff this week. Some of that is headline-driven, with Kazatomprom raising their output guidance and Valaris lowering 2024 EBITDA outlook. However, in my eyes, long-term, they seem like setups I want to be involved in. But with the indices being in correction territory, talks of a recession that's just come out of the blue in the last couple of weeks, the ISM Manufacturing Index surprising to the downside, it should be of no surprise that many stocks just aren't performing well. Layer on the fact that we're in the summer doldrums and you get what we're currently experiencing. This isn't a reassuring message, but a message nonetheless. Either you have the courage of your conviction in the names you hold, or you don't. You're either selling the dip, getting shaken out of your positions, or you're adding on the pullback or waiting to add into a deeper price retracement. That's how this game works. In regards to myself, as you know, I've been stacking cash and I will continue to do so until I find it appropriate to deploy that capital, which I did some of this morning. Monday, I don't know what the date is, August something. Humans are consummate professionals at rationalizing any decision they make. Take, for instance, this below chart. Hedge funds turn bearish on commodities for the first time in more than 8 years. Some will say the bearishness is justified and that the trend is your friend, while others will say buy when there's blood in the street. There's always a quaint expression readily available to validate whatever bias you have. Along those lines, the below screenshot demonstrates you can spin a story however you want, which is quite interesting. Some confusion today regarding the Transocean news. Here is an incomplete but handy guide to help decipher if news is good or bad for RIG. That's the ticker symbol. So, here we go. Oil price rising. Well, that means demand destruction, war, overdone move. But if oil prices are falling, oil in Transocean equals terminal zero value. Weak USD means slow economy, which equals oil demand being down and oil prices falling. Strong USD, historically an inverse relationship, oil down. So it doesn't matter, weak USD, strong USD, whatever it is, you take the information and you post hoc rationalize it in a little curated narrative that makes you feel validated in whatever preconceived notions you have. That's how people work. People try to derive an ought from an is and then act as though the ought is the same as the is. I've written on this extensively. I've talked about it extensively. I'm not going to belabor the point here anymore. Earlier in the year, I bemoaned how many of my companies were saying that the second half of the year is when we'd see better news, always kicking the can down the road. And as I said then, that could either be true for real reasons, or it's an ostensible appeal in a way that buys them time and having to account for things not going their way. It's interesting seeing Valaris' conference calls earlier in the year talking about the second half of 2024 being a point of inflection and things going well. But seemingly that ship has sailed. Now attention has been diverted to 2025 and 2026. And I predominantly noted this, I believe, with Valaris, as well as back when I was in the specialty alloy names, ATI and USAP, about second half of the story. It's like it's always later things are going to improve. It's always like in half-year increments. And yet again, a lot of contracting and final investment decisions and things like that are made in the back half of the year. I understand that. Those are real business decisions. But almost just as often, people are bullshitting you and just putting things off instead of having to address what needs to be addressed as far as I'm concerned. So the question becomes, are they leading me on, or is this merely the clunkiness which is real life business? Things can get postponed by a couple of quarters. And a couple of quarters doesn't sound like much until I say 6 months. And then 6 months might not sound like a lot until I say, 180 days. And that's, how many trading days sitting in front of your screen or looking at your screen multiple times compulsively each and every day? That's a lot of time to get uneasy and feel insecure and sell your position. So that's worth keeping in mind. So, is this the clunkiness of normal business, or is it something else? That's the question I keep asking myself. I assure you I don't like getting led on. I suspect the answer is a little bit of both. I haven't sold any and I've considered even buying more. So even if I'm wrong, my behavior is demonstrating that I believe the clunkiness and volatility of day-to-day business is largely at fault here. I hate to miss the forest for the trees. It's also worth having your expectations tempered. With that said, let me leave you with this post. So this is in regards to uranium. This would be what you would call the bearish argument, and worthwhile to pay attention to, because even if it's not true for now, at some point it will become true in a similar context. So I guess I can read all this. According to the UxC, supply keeps coming on. UxC published its annual review of global uranium production for the year 2023. Worldwide uranium output rose by 14 million pounds for the year, recording a total of 143 million pounds compared to 129 million pounds for 2022. Contributing to the uplift included the ramp-up of Cigar Lake and McArthur River in Canada, incremental increases at both the Rossing and Huzab mines in Namibia, as well as higher recovery from Uzbekistan mines. Kazakhstan remains the world's largest uranium producing country with an aggregate output of 54.9 million pounds, 39% of global production, followed by Canada, which contributed a total of 28.6 million pounds, or 20% of global output. Namibian production rose by 24%, recording an aggregate output of 18.2 million pounds of U3O8, with CGN's mine producing 11.7 million pounds, an increase of 34% over 2022 output. UXC forecasts for 2024 global uranium production will fall in the range of 153 to 158 million pounds based on further increases of Cigar Lake and McArthur River, as well as the restart at the Heinrich and Honeymoon mines. So the gist of that is directionally more production is coming online and the rate of change is increasing at a decent percentage clip. Now, this is all the supply side. Now, supply side, people focus more on demand and supply. That's what Capital Returns, the book's all about. I wrote an article about that, how people keep on paying attention to demand and not supply. So I could say the inverse here and say this is all about supply, but what about demand? What about the restarts? What about the new builds? What about the extensions? What about the stockpile rebuilds? So on and so forth. And that's what makes a comprehensive and articulate and high conviction trade, is understanding all these dynamics, or at least nonetheless building the conviction to have it. That could be emotionally based. Some people are very strong in their emotional decisions and you can't shake them of their conviction. And they don't have any data to support anything. And then other people are all about data driven and lack emotion for the most part, and that gives them their conviction. So whatever, like ultimately the point is not getting shaken out of your position insofar as you think it's going to go up, but of course having the humility to recognize that you're wrong. So good luck striking that balance. And the point here is that there's always another perspective, and you don't really want to get too bogged down in any one camp. I've never been the uranium to $500 crowd. I was not in the oil to $200 crowd. I'm not really in those crowds. It's like, well, I think oil stay range bound between 70 and 90, and that's good enough, and will allow offshore to keep doing its thing. That's been my argument. And uranium is like, I got into that kind of, well, I got both into my offshore and uranium trades late, but Cup of Coffee Capital inception date was January 1st, 2023, which was, by my measures, a year or two late to the party in those names, but I thought there was still enough juice for the squeeze, but the risk reward was not nearly as asymmetrical as it would have been back in 2021, and that's just how that goes. So with that said, I ended the week down, so last Monday through Friday, 6.6%. And then this morning, when I finally was able to get into my account, one moment. Yeah, when I was down 8%, which, that's incredible. The S&P was down 3% and my portfolio was down 8%. And then last time I looked, it was down 5%, but who knows? And interestingly enough, ending July, I'm back to beating the S&P year to date. I would say as of today, that's not the case, with me being down 8% and the S&P being down 3%. So back to underperforming. And that's that. Like I said, I added to uranium. That's all I did. So Decibel is down more. So I think I'm now down 30% on that name. And that's really all I have to say about what's going on. So thank you for watching, and until next time.